Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Mike, are people trying to short gold right now?
Well, it's a funny thing. On one hand, gold has been a great thing to invest in. Since 1999, gold has actually gone up more than the Dow. And last year, gold stocks went up a greater percentage than the S&P 500 did. Both had good years. I'm not trying to say don't buy the stock market, but gold has done well. And at times of economic weakness, gold does very well. We got a whiff of that last year from June to August. In Labor Day, the price of gold went from $1,300 to $1,550 when the yield curve inverted in the United States and the Fed started to lower interest rates. Gold was a giant beneficiary. I think the same thing is set to happen again down the road. The odds of an interest rate cut are now over 80% before the end of the year, not next month, but by December, and that'll help gold when it happens. But despite all that, there's significant evidence that small investors in the United States are trying to short gold or bet against it. And as evidence of that, I'd point to two things. First of all, the Commodity Board, Commodity Futures Trading Commission, they release something called the Commitment of Traders Report every single week. And those reports show you what large traders are doing and small traders. And this year, there's been more short selling among small traders with gold futures than buying. In fact, on the week of January the 14th, they opened up 4,000 short contracts while only going long an additional 1,000. That's the week they had the most activity. And I have an account with Robinhood and keep it because one of the things they let you see is the number of people that own a stock or an ETF that have accounts with them. And they'll give you even a list of the top 100 most popular stocks to own with the number of people owning them. So you can watch this day by day and get an idea of what are people trading and buying and so forth. And as we're speaking, there are 2,689 people with Robinhood accounts that own the 3 times short ETF for gold stocks, JDST. Meanwhile, 2,332 people own JNUG, the triple long ETF. So more people on there are buying these triple short ETFs than the triple long ETFs. And these are all, 99% of the people Robinhood are very small account holders. So the small trader seems to be trying to short it, or at least not very excited about going long. And I think they're missing out and seriously mistaken. And this indicates to me that when it comes to the individual investor, the small player, particularly in the United States, they haven't been a real believer in gold all year. And I don't mean just this year, but even last year. They've pretty much ignored the rally because they don't believe it, and the real active ones are trying to short it. And this is sort of what happens anyway in the first inning of a bull market. Generally speaking, it's professionals, large money people, and industry insiders. And frankly, I would consider probably a lot of the people listening to your show as industry insiders, people who go to the House Street website or other major mining websites and get information, and have been doing it already. They're keeping up with what's going on. Really, the Robinhood type person only reacts to price trends on the short-term basis, combining that short-term movement with what has been going on for 12 months or longer. They tend to really be fixated subconsciously on what happened 12 months ago, what the major trend was then, and then interpret the short-term swings with that. So if something's been, for instance, at a bear market for a year and it bottoms, they tend to always miss the bottom, and if something tops out and goes into a decline, they typically don't react for a year later. That's in fact what happened in the last bear market in the U.S. stock market. It topped out in the fall of 2007, but the masses held on until the crash a year later. Then they panicked out. So they're just slow, and their activity, I think, suggests that we're nowhere at the end of a gold bull market, and it's the first inning, and we should treat it that way. And I know one thing that happened this year is when those Iran attacks happened, gold, went above 1,600. The night Iran countered Trump and struck that U.S. Army base in Iraq, gold went above 1,600 and then came down to below 1,550 within a few days. And that move, I think, is when a lot of these people try to short gold. They thought, well, that's the top. And gold has not pulled back since then in any real meaningful way. It hit 1,550 and bounced back, and it's basically going sideways. I think this is a sideways consolidation. So anyone who shorted gold, I believe, the idea was going to collapse. It hasn't collapsed. And I think I'm hoping I'm delivering a warning to them to reevaluate what they're doing and what the real trend is, because if you're in a real bear market, things really fall. They just don't go down, and then bounce back up. This is, to me, a normal consolidation that's still playing out, may continue to play out for the rest of this month. But gold went up from below 1,300 last May all the way up to 1,600. And just as nothing, just as I don't think it was going to crash, it also is not going to go up every single week without at some point pausing. So that's really what I think is going on, and that gives us a great opportunity, to take entry positions or look for the best mining stocks, or new mining stocks for that matter, to get involved with.
We'll have more with Mike Swanson right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, is anything going on with silver?
Yeah, I think silver is pretty much locked in with the trend with gold. It trades a little bit different, too. For one thing, it's more volatile than gold, and silver went from 1425 to 1975, roughly 40% gain from June to September. But silver also does something interesting, and that is, while it has a good correlation with action in gold, there are times when silver lags the gold price, and then times when it leads it, and it kind of switches back and forth. So right now, this year so far, really since Labor Day, silver has been lagging gold a little bit. In fact, gold just at the beginning of this month went to 1,600, and silver has not gone through the high of 1850 that was set last November, early January, and so forth, whereas gold has recently gone to those highs. So some people worry about that, but I don't really think that's anything at all to worry about. I would, in fact, assume that silver may continue to lag gold a little bit, but then at some point when gold goes through its recent high and rallies for several weeks, silver will come alive again. But regardless of that, the silver mining stocks are even doing better than the price of silver. And that, in a certain sense, is a huge tip-off that, really you shouldn't worry about silver crashing, or lagging gold. You should just accumulate, because the relationship to the stocks and the metal tends to be a leading indicator. When the stocks don't go up and silver goes up, then you need to worry. In fact, that's exactly what happened in 2011. Silver had the famous run towards $50, and the big cap mining stocks ignored it completely. And that was a sign that when that run was over, there's going to be a serious drop. And it wasn't just a drop. It became a horrible bear market. But the opposite is happening. The silver mining stocks are strong. They're doing good. And they're likely to continue to do that. And that's what I'm paying attention to. The one exception when I say the silver mining stocks are acting strong, though, is silver core metals. For example, Wheaton Precious Metals is at $29. It's up today almost 1%. And in June it was $20. And it's maintaining all the gains, basically consolidating. Whereas Silver Core was $6 to start the year, and it went down to $4 on Friday. So it's a big drop. On a percentage basis, it's almost 50%. However, the reason for that drop is company specific. It has nothing to do with the price of silver. So people who worry about Silver Core being a leading indicator in this case are wrong. The reason why Silver Core fell is because it's got mining operations in China that were forced to cease operations because of that coronavirus crisis, that outbreak. The Chinese government demanded that they stop, just as they demanded that factories in many parts of the country suspend operations temporarily, but they'll come back online. And I think, I don't know if this is the bottom for Silver Core, but at some point I would think it'd be a good buy, because this coronavirus will fade away. It's not a permanent situation, and so this to me will eventually be a buying opportunity if it's not already in that stock.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, is the U.S. dollar gaining strength?
Well, it's over the past year, the U.S. dollar really has been going sideways. It's almost like the exact price it was now as it was on Labor Day, as it was on July 4th. But the long-term chart's very interesting. It fell from 2017 to 2018 and made a double bottom and then rallied basically up to last summer. And I think the rally ended and it's just drifting sideways. Although the past 2 weeks, the dollar has bounced back up. The U.S. dollar index is just below 99. It was at 96 at its most recent low earlier in January. But I think it's still, we'll make it simple, it's in a range. 99 is resistance, 96 is support. I believe that, one reason it's gone up is the Chinese yuan has gone down, and so some money is going into U.S. stuff for a safe haven, I think, for the moment. But I believe the U.S. dollar is actually slowly rolling over, and at some point in the future, when the Fed lowers rates, that it will end up going into a bear market. So I think we're just in this slow topping pattern. And I don't expect anything dramatic to happen to the U.S. dollar, maybe not until the fourth quarter. One interesting thing, though, with gold and silver is historically they've had a very strong negative correlation to the U.S. dollar. That means when the dollar goes down, gold and silver go up. However, that has not been happening for really the past year. That relationship broke apart starting around March 2019. So I use something, you can create a correlation indicator. It compares the price behavior between two instruments or two ETF stocks, whatnot. If that correlation is 1, it means they're trading exactly together. -1 would mean completely opposite. Historically, the correlation with gold and the U.S. dollar on a 200-day moving average basis of prices is below -90.9. Today, though, it's a positive correlation. It's been a positive correlation since last March of 2019. That means they haven't been trading opposite together, which is quite unusual historically. And I don't think that's going to go on forever. And I think it's actually a very positive development for gold. It would suggest to me that there's limited downside to gold. And then at some point when the dollar goes into a bear market, I would expect this relationship of gold trading opposite the U.S. dollar to really assert itself. What's really happening with the gold price, it's not so much the U.S. dollar that's been what it's been reacting to, up or down, but the U.S. bond market. The correlation between interest rates, treasury bonds, and gold has been the strongest relationship it's had, if anything else, in the financial markets. So when the treasury bonds have gone up, and they do that when interest rates go down, gold has gone up too. And that relationship is continuing to this day, and I think that's going to be the real driver until we see the Fed get to, 0 rates or whatever they're going to lower it to on the next round of rate cuts when they happen. Once those rate cuts come to an end, I think is when we'll see the U.S. dollar really fall and gold really take off, and the relationship will change. Because what will happen is the bond market is going to reach a point where the interest rates are no longer going to go down, and the bonds will therefore no longer continue to go up in price. And when that happens, the only thing left for people to do as a safe haven, which is what they use bonds for, is to buy gold. So that's going to be a key moment on the horizon. I'm not saying it's a week away or a month away, but it could start before the end of this year. But I think that's what we are having one moment that's going to define the next decade, the 2020s to 2030s, as it plays out, and why I think gold is a necessary investment for diversification for anyone in the financial markets.
Mike, I know you like to look outside the U.S. and Canada to see if there's any bargains out there. Are there any reliable bargains?
Yeah, I believe so, and I've had some investments in Russia actually now, and in the Turkish stock market actually. And the reason why is there's a valuation indicator called the cyclically adjusted PE. It takes the 10-year average of the PE for a stock market and adjusts it to inflation. And the U.S. is one of the most overvalued markets in the world by that metric. And Russia and Turkey are among the cheapest in the world. And not just now, but on a historical basis, their cap ratios are below 7, which historically is very cheap. So I see opportunities there. And I have a small amount of money devoted to both of those countries. There's a TUR ETF for Turkey and the RSX ETF for Russia, but there's also some ADRs that trade on the U.S. over-the-counter market, that one can buy. And there's a stock, for example, one of the largest telecommunications companies in Turkey trades on the New York Stock Exchange and under the symbol TKC. I have a position in that stock, and it's got a chart where it's just going, sideways, but it pays a nice dividend of roughly 5.5%. That's more than I get in a CD or a treasury bond, 5.5%. So those are the kind of stocks or ideas I'm looking for, outside of the United States. But I know people are afraid to do something like that because just the idea of investing in a foreign, stocks in a foreign country sounds risky, and you do have a currency risk when you do that. But I also think that's what's created these opportunities, because Turkey had a financial crash 2 years ago and its currency collapsed. The same thing happened to Russia several years ago too, about five years ago I think it was, 4 or 5. And that actually is what creates these cheap opportunities outside in countries outside the United States or Canada for that matter. It's when they go through a crisis, when their currency collapses, and then you let the bear market play out and then look to buy. So I think the risks are high when you invest in things that are red hot and going up for years, and then the valuations are crazy. And it's a complete momentum game, and it works until it ends, and you got to get out before it ends. Right now, we saw that was the story of Bitcoin, pure momentum in 2017. Some people made money on that, but a lot of people got killed. And I think the same exact story is going to play out again for Tesla. People chase that stock, people jump in it, and those who got in at the right time have made money. But, the valuation is crazy. Last week, an analyst came out and he predicted that Tesla would go to 15,000. 15,000 at 782, 20 times in price just about. Well, if Tesla were to do that, it would be the biggest company in the world in terms of market cap. It would be twice as big as Microsoft, which is the biggest company now. And I just think that's insanity and absurd. But when something goes up, as Tesla has done, people try to come up with new metrics, theories to believe it can go up even more. That's what a bubble is. It's a bubble stock. And this was the same thing that happened in Bitcoin. People in 2017, Bitcoin went to 20,000. People are saying it's going to go to 100,000 because it would replace the dollar and everyone would use Bitcoins. And then none of that happened, and Bitcoin crashed. And I think in time, that's what will happen with Tesla too. But that's what a bubble is like. The opposite of valuations are cheap. This country collapsed and it's fallen apart from about, but nothing, an economy can have a depression or a recession or a stagflation, currency crisis, and people are scared of those things. But when they happen, they're not the death of a country or even an economy. And the cycle bottoms and comes back. And in time, I know we're going to have a vicious crisis in the United States. Things will seem to fall apart. The dollar may go, fall 30, even 50% in value, and it'll seem like the end of the world, but it won't be the end of the world. And it's not something to be scared of. So I can invest in Russia or Turkey or talk about it. And one day, hopefully instead of saying Tesla is a crazy stock, we'll be saying companies like GM are super, super cheap, and we can invest in them when everyone else is scared to do so, just as they're scared, the idea of investing in Turkey or Russia now, I think.
Mike, thank you so much for being on the show.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.